What strategies do you use to avoid making impulsive decisions during trading? So I feel like so many traders fall in the trap of making impulsive trading decisions because they don't think about trading as a career. So for me, one thing that made me stand out, especially with not making such uninformed decisions, especially like taking impulsive trades, I treat my trading like a 9 to 5 job. So I have specific times where I dedicate to sit by the screens, you know. I normally like to trade between London session and then New York session. And so as far as I am seated by the screen, I'm monitoring everything to take a position. I don't consider that impulsive because at that point, I'm going through my normal thought process of determining my metrics for taking a position. But it will be impulsive if I know that I'm supposed to be trading between the hours of 4 a.m. to, let's say, 12 p.m. And then suddenly I come back by my screen and then, let's say, 3 p.m. I suddenly see something new. Wow, this looks like something juicy. Then I'm acting impulsive. So I try to stick to a specific schedule just like any other employee would be asked to work from, let's say, 8 to 5. If you choose to work from, let's say, 6, 7, or 8, then it's really up to you if there should be any, let's say, sudden unforeseen circumstance or an accident in the workspace. Then you put your own self to jeopardy because you chose logic in trading to then you're supposed to like trade from, let's say, 12 to 4. And then within that space, you are consciously aware of what so if you go back and then you're casually out there you come back to see a position at, let's say, 3 or 4 and take it. Then you could just be putting yourself that an employee who's supposed to work within a set of a time frame is choosing to do. So that's what allows me not to continuously fall in the trap of taking impulsive tricks. Well, in hindsight, what you're basically saying is you're treating your trading as a business. Yes, basically. How do you guys do it? For me, to not fall in impulsive sudden for me is simple to avoid getting into impulsive trades is following a trading plan because if you don't plan, you're bound to fail, you know. The way they normally say if you fail. You fail to plan, you plan to fail. So would you say like trading plan is like a broader aspect of preventing errors in trading? Yeah, it's like my 10 commandment tablet. So I have to follow each rule. And that's like a compass. It guides me into getting into trade. So I'm doing my analysis. I'm choosing what assets to trade before the market opens. In your case, you said London session where you have a lot of movement. So I have to choose before the market opens. And once I choose 3 or 5, that's all I'm focusing on. If they meet my threshold and I follow strictly my trading plan, then I get in and I take the shot. Which assets you mostly use for London sessions? Which assets? So I normally would trade a pound pairs for London sessions. If I'm day trading, I would specifically stick to predominantly watching the pound pairs. But within that same hours, I'm still like looking at my swing trading setups, which would take like a day or two to materialize. But for day trading purposes, I stick to pound USD, pound card, pound the Euro GBP just because they move very fast and I can easily make like 50-70 pips before the day or the morning ends. I think if you use the London session, you don't use with USD. Go for JPY, JP, PayPy, and other crosses because USD session is closed that time so you can take a good trade from other crosses. So what makes it interesting is that because logically it's like 2 economies, which is the UK economy and then the US economy in this sense. Even if the US is sleeping and then there's a vibrant thing going on in Shao, the UK, it tends to make pound USD move extremely wild other currency pairs. It normally would happen with the antipodian pairs. Like you'd normally observe that when you're watching Euro, let's say ODUSD and odd card, they like to move in the forex Asian sessions because the Europe market is silent and dead. So it tends to see if there's a negative fundamental or any that comes from their side, then you see the currency extremely selling off. And if it's a positive one, you see them extremely rallying. So sometimes you would miss your setup that you were looking at too. Take for let's say euro odd because you slept and woke up very early in the morning, especially if you live in a country that aligns with like London session. And it happens to me a lot. So I tend to observe that it's only because those European markets are aligned. The other crosspair are active. So any trigger, then it allows them. The market tends to not have like a certain direction, especially when two markets are open. That's my observation though, because like things are happening in the US is triggering the US side of GBP USD, and things are happening in the UK is also triggering the pound side of GBP USD. So you tend to see, let's say, London session in the afternoon, rally up, New York session rally down. So you want to find a sweet spot where one is sleeping, one is active, and you can get one direction for a long time. Do you remember your most successful trade? Which instrument was it? Of course, I do remember my most successful trade was Nvidia stock on an earnings call. Very exciting moment. I love earnings call, especially for tech stocks. And I did a purchase. I did buy, and it was very successful. It was like, I think 20%. So I made a lot of money and I was very happy, of course. Is it something you expected? It's expected since I have been studying Nvidia for a long time. All the cheap strategies. I follow Bitcoin technology. So I know what mining was doing for this kind of stuff. So I did study a lot. It was not a gamble, definitely. It's not that risky. I mean, the account was very big, and it was not that big. I mean the percentage of risk. You mean where do I position my stop loss? It was a position like very below because I just wanted to trade the earnings. So I wanted to be close at the open of the market. So I think he's driving towards you risk, like 5% of your account or 10%. You can't control it on an earnings call. Okay, because if the gap is too big, you can't control it. Even though you position a stop loss, so it's more risky. How has your approach to learning and improving as a trader evolved over the years? My approach, I initially started with indicators. And at the very beginning, that's what really attracted me to it. Because you backtest, you see all this perfect entry levels, you see all the take profit levels. And then later on, I discovered a lot of the indicators were lagging indicators. So they're not really suited for my kind of strategy. So I then later decided to mix the technical analysis and looking at fundamental analysis because my background is news. So fundamental analysis is really like my cup of coffee. So I incorporated fundamental analysis. And of course, looking at sentiment, the court report, for example, combining those three is like the proverbial story of the three-legged stool. So the three have to balance in order for me to get into the trade. And I always say, my trade has to tell a story. So if I am buying a currency pair, I have to tell a story about why I'm buying it. And so my evolving is acquiring more knowledge, keep learning about the markets, and borrowing from the different strategies from people around me, people I look up to. And I'll just borrow something small from here, something small from another place. Combining all that feeds to my trading profile. So which is your best indicator to take a new trade? Your most favorite indicator for trade? Well, I will say at the moment, I look at volume. I'm really keen on volume. Because once you have volume, then it can give me an idea of momentum. Because there are times when you're trading something that has no volume. So you don't have a lot of buyers or sellers or participants in that particular asset class. And so getting in there will eventually just lead me into just bouncing up and down. You're not really having a trend. And so I pretty much look at volume as one of my favorite indicators. Yes, volume is the most important indicator for trading. Yeah. Oh, so you agree with me? Yes. What do you guys think? I love volume. It's like our oxygen in trading. Oh, I like the process. I think it's the ABL strategy I have just made up. It's the always be learning strategy. Can I borrow that? Of course. All right. How has your trading strategy evolved over the years? And what lessons did you learn from these changes? I think it changes by applying testing many things. Like I am testing some indicators, I find working with them and some others not working. And when I find a working one, I keep testing them over many charts. Like many currencies, many indices. And when I find a one working well, I keep testing it with many time frames. So maybe one of them working on a daily time frame and the other one not working on daily. So I keep testing them until I find the best working on most of long frames. That was the best thing that have changed my strategy over the years. And of course, the main thing for me was adding. And my favorite indicator ATR, the average true range. Oh, I love it. Yeah. It was my best risk management strategy ever. And it keeps me growing my account gradually, without risking any of my account. That's it. Oh, you talked about, backtesting. You have your own rule of thumb. When you're backtesting using an indicator, like how long do you go back or try out? 1 month? 2 months? No, normally I test for like 3 years. Oh, yeah, I have to see what happened before. So 1 month or 2 months, maybe there is a news. Or something happened in previous 2 months. So it's not enough for me. I need to see a long period. So usually I do 3 years back testing. So what determines if an indicator is not good for you? Or is good? First thing is lagging. Because I saw many indicators lagging and repainted indicators. So like 90% of indicators in the market repaint and lag. Lagging indicators. I use some tools that can replay the charts. So when I replay the chart, I can see what indicators gives me as actual moment. So I keep seeing this for the previous 3 years. And I can see if it's working or not. What's one habit which sets you for a success trading day that you wouldn't change? Proper money management is most important other than any indicators and any strategies to use. One thing if I use the proper money management, so I can win all the tradings and all the trade strategies. I do trades flipping the coins, 10 trades, and use only the money management, 1:3. So 7 trades are negative, 6 trades are negative, but my whole trades are in profit. So money management and risk-reward ratio is the most important for trading. Totally agree. So if the last 3 trades went into profit, but let's say 1:1. No, if you use the money management or risk reward, you can go for the 1:3 or 4 or 5. If you prefer the 1:1, I mean with the coin tossing, like you said, I'm just giving an example. What if the 7 straight stop loss, but the last 3 that went well, they did not reach the targeted profits? Let's say 1, but rather reach 1 and then reverse back to a loss. Would you still? No, then prefer for 1:3 or 1:4. Being 1:1, and that was not. It's working. I get you. I'm getting a question. For me his style is? I think it fits your profile. I've done that several times. I find it a bit tricky because if you do the fast, if you lose like you said the fast and then 7, you win the last 3, but your risk to reward ratio is still 1 and then it reverses, then you're still in a loss. And what I personally do is incorporate what he's saying. The risk reward ratio plus position sizing. Risk management for me is one of the biggest lessons in trading. So position sizing to avoid over leveraging. And so I look at the size of the account and decide what percentage am I risking in that account. And then now I can go to the risk to reward ratio. So if it is 1:3, 1:5, more often than not is more than actually 1:5 because I'm a swing trader. So I'm going for the big swing. So sometimes it can be 1:10. So the reward is much more in that sense. 1:10 ratio. Sometimes it can go on to 10. But that is holding a trade for even more than a month at times. So you are saying that you can determine that. Let's say for a position I want to take 5% risk. But your trading setup, you're looking at 1:5. Means that 5% for 25%. Exactly.